welcome to the deep dive. Let's get straight to it. Berkshire Hathaway, huge company, insurance, railroads, the works, is facing a really massive shift. By the end of 2025, Warren Buffett, the legend who's been in charge since, 1970, he's retiring.
That's right, a huge moment.
And stepping in as CEO, Greg Abel. Buffett picked him himself. This is way more than just a leadership change. It feels like the end of a whole investment era defined by Buffett. So our mission today is to dig into what this really means for Berkshire's future, its strategy, its whole culture. We've looked at a lot of analysis on that.
Okay, let's dive in. Berkshire, like you said, it's this vast collection of businesses. And what's really interesting when you look closer is how it's structured. Very decentralized.
Right.
The heads of Geico, BNSF, Dairy Queen, they pretty much run their own operations.
So they have a lot of autonomy.
Exactly. And Greg Abel, he's already the vice chairman overseeing all the non-insurance parts. So he knows these businesses inside out already.
Yeah, he's definitely not walking in blind. And you can't talk Berkshire without talking about Buffett's actual results.
Well, absolutely. The numbers are just staggering.
Since 65, the Class A stock.
Yeah.
It's up something like 5.5 million%.
It's almost hard to comprehend. An average annual return close to 20%.
Consistently beating the S&P 500 by a huge margin.
And it's not just being lucky, right? It's that value investing core, the patience.
Waiting for the right pitch.
A real aversion to taking silly risks and, making his own calls, regardless of the herd.
It really makes you wonder, though, how much of that magic, that specific Buffett touch, can actually be replicated by someone else?
That is the trillion-dollar question, given Berkshire's valuation now. And it's more than just the financial side. There's this immense respect he's built through clear communication. Those annual letters are famous.
Right. People really trust him.
He's seen less as just an investor and more as the architect of this incredibly resilient business model. A model that's supposed to last, beyond him.
And the succession thing wasn't exactly rushed, was it?
No, not at all. He's been quite open about planning this for, probably the last 2 decades. Very deliberate.
So, Greg Abel takes the spotlight. He joined Berkshire way back in 2000.
With the MidAmerican Energy acquisition.
And what he did there was pretty impressive, turning it into Berkshire Hathaway Energy. I read it's the biggest wind energy producer in the U.S. now.
That's correct. A major transformation and a huge success story within Berkshire.
Then he became vice chairman in 2018. Now, here's where things might change a bit. People say his management style is maybe more hands-on than Buffett's.
That's the description, yeah. More involved day-to-day compared to Buffett's sort of legendary delegation, though still respecting that subsidiary in attendance to a large degree.
Yet, Buffett seems completely confident. He's even said he'll keep all his Berkshire stock.
Which is a massive vote of confidence, putting his money where his mouth is.
Definitely. What do you think Buffett sees there that gives him that assurance?
Well, that contrast in style is certainly something analysts are watching closely. Abel's more direct involvement could maybe change how some operations are overseen. Whether that's good or bad, time will tell.
Right.
But the fact Buffett is keeping his shares speaks volumes. Still, there is that lingering question, and it's a fair one, about Abel's specific track record in, say, public market investing. Can he spot those big opportunities like Buffett did?
Yeah, that seems to be a key uncertainty for some investors, which leads us right into the big challenges and maybe the potential changes under Abel. First off, that huge pile of cash.
Ah, yes. The cash horse.
Estimates are, between $290 billion and maybe nearly $350 billion now?
It's an enormous sum.
Yeah.
And the pressure to put that money to work effectively, to keep growth going, that's going to be intense for Abel.
It's a good problem to have, I guess, but deploying that scale of capital wisely, that's a monumental task.
It really is, and it creates this interesting dynamic. Some analysts actually think the stock might go up if Abel seems more eager to invest it.
Because Buffett's been maybe a bit cautious lately, finding deals expensive.
Exactly, that's the argument. But the flip side is, will Abel find those truly outstanding high-return deals that Buffett seemed almost uniquely able to uncover?
Big question. Now, it's worth remembering the actual stock portfolio, that roughly $290 billion part, that's not directly Abel's job, is it?
Correct. The plan, as widely understood, is for Todd Combs and Ted Weschler to continue managing that public portfolio.
And they're seen as top-notch investors themselves.
Absolutely. Both highly regarded with strong track records even before Berkshire. So that provides a lot of continuity and, frankly, reassurance for that part of the business.
Okay, so that seems stable. But looking bigger picture, the overall strategic direction, That's where we might see some shifts, right?
That seems more likely, yes.
Like, could Berkshire dip its toes more into tech, a sector Buffett famously avoided for a long time?
That's a definite possibility. Buffett's caution there was well known. Abel, coming from energy where tech is crucial, might just have a different viewpoint.
Or maybe selling off businesses that aren't performing as well. Or even pushing into totally new areas.
Could be. A new leader might look at the existing portfolio with fresh eyes, identify underperformers, or see opportunities for big acquisitions in spaces Buffett hadn't focused on.
Maybe more aggressive share buybacks, too, with all that cash.
That's certainly on the table. They have the capacity for much more active capital deployment, whether it's acquisitions or buybacks.
Then there's the culture. That's harder to define, but so important for Berkshire. That trust, the autonomy, the prestige of being bought by Buffett.
That's a huge intangible asset. Companies wanted to be acquired by Buffett, knowing they'd found a permanent, supportive home.
So Abel's challenge is preserving that unique feel, right? That ability to act fast when a deal comes up. Buffett could do that because, well, he was Buffett.
Exactly. How much of that magic, that Buffett premium in acquisitions, is tied to the man himself versus the institution? That's a critical question.
Maintaining that reputation as the preferred buyer for great businesses will be vital.
Absolutely vital for their long-term acquisition strategy.
So, for those of us watching, for you, the listener, what does this likely mean for the stock and for investors? Probably some choppiness in the short term.
Some short-term volatility seems almost guaranteed. It's just the market adjusting to such a major change at the top.
Makes sense.
But the general feeling seems to be, cautiously optimistic. The company has prepared for this. The plan is there. The management team below Abel is very strong. Some even argue there might be a kind of Buffett discount already priced in because of his age, and maybe that fades a bit under new leadership.
Interesting point. And from what we're seeing, the core strategy probably stays similar. Reinvesting profits, buying back stock when it's cheap.
The expectation is definitely for continued discipline in capital allocation that's deeply embedded in Berkshire's DNA.
But everyone will be watching Abel's first big moves, especially with that cash pile.
Precisely. His early decisions on capital deployment and any strategic shifts will be the clearest signals about Berkshire's future direction under his leadership.
Still, the underlying businesses are strong, right? The insurance, the railroad.
Incredibly strong and diverse. That foundation, plus the quality of the existing management teams across the subsidiaries, provides a really solid base. The argument is that Berkshire's core strengths aren't just about one person.
And didn't Buffett himself say he thinks Berkshire will do better under Abel?
He did say that publicly, yes, which is quite a statement.
A remarkable endorsement. And some analysts are saying if the stock does dip significantly after Buffett leaves, it might actually be a great long-term buying opportunity.
That view is definitely out there. The argument being that the fundamental value of the company itself remains very high, potentially undervalued even.
Okay, so pulling it all together.
The main takeaway seems to be this. Yes, the end of the Buffett era is a huge deal, truly historic. But Berkshire seems about as prepared as any company could be. You can't replace Buffett's specific genius, obviously, but there's a strong foundation, a capable successor in Greg Abel, and that skilled investment team with Combs and Weschler.
So the future involves watching Abel closely. Capital allocation, strategic moves.
Exactly. That's where the focus will be.
So the Oracle of Omaha is stepping back. But the Berkshire Hathaway story, it's definitely not finished.
Not by a long shot. It's just starting a new chapter.
A chapter everyone will be reading very closely. What will define the Greg Abel era? That's the big question now. Thanks for taking this deep dive with us today.